If oil hits $20 per barrel, what happens? If it hits $10 per barrel, what happens? Even at $30 a barrel, what does that say about the economy? Is oil needed anymore? Is it being consumed around the world? I believe the answer is yes. During the financial crisis, we saw many different markets dropping, then rising together, in sync. Even though historically, some of these should have been polar opposites. But when you print absurd amounts of money, anything is possible. Today, we have a crashing stock market, crashing oil market, and the question is, was oil at plus $100 a barrel overvalued? Or is $30 a barrel a more realistic level for it? You came here for the truth, so let me unveil that for you. Today we're going to talk about oil among other things. As we discuss oil, $20 is the new $40. A frightening thought for some. Let's get into this right here, beginning with the Asian stock markets as of this recording. And you could see on the Monday they open up and not doing well. This is showing you over the 1 month. And it really goes to show you how weak the market is right now. But what I wanted to highlight was what I discussed in the introduction, and it's that markets in general seem to move together. This is a globalized system everywhere around the world. Everything happens at the same time, essentially. Yes, you could have one market definitely affected more than the others. But look at this. This is the three different Asian stock markets. For the most part, they're moving together. So when you ask, I always get questions, what to invest in. Should I invest in this market or that market? Now think about it. Let's just say this was China, Japan, and South Korea. And you were deciding where to put my money. Should I put it in China, Japan, or South Korea? Well, based on this chart, in those general terms, of course, there isn't really much difference. So that's what you have to remember about the stock market, commodities, any sort of futures, ETFs. Try to zoom out. Try to understand this from a top-down view. Let's move into this here. $20 is the new $40. This is out of The Economist. And there are articles about why the oil price has plunged. I don't necessarily agree with everything, but let's just take a few points from this. Since the new year, the price of oil has surprised even the most bearish punters, plunging by 18%. America's benchmark briefly dipped below $30 a barrel, its lowest level since 2003. I do believe that it could continue to decline. As Iran came online with their oil, immediately the markets reacted to that and it continued to fall, stocks continuing to fall. That's what's happening right now. They're just simply reacting. Perhaps some would say overreacting. I'm not going to necessarily give my opinion on that, but we have to figure out what's going to happen from here. There's more in the article if you'd like to check it out for yourself. They get into more details certainly. But I want to show you this, oil reserves. You can see all the different countries who have these oil reserves, what it all means, which ones are OPEC, non-OPEC, and it will give you an idea of how things work. You need to understand the importance of certain countries, but also understand that, for example, a country like Russia has much to lose when the price of oil is down. So isn't this a very, very powerful weapon? Now, in some cases, certain countries would be willing to take a hit on their own exports, on their own value of their own oil, as long as it hurts the so-called enemy. Let's move into this here. Out of the Times, millions of extra barrels of Iranian crude oil could begin spilling out into the markets as they have, adding further to fierce downward pressure on prices, experts have warned. The UN, which completed inspections at the Iranian nuclear site, expected to approve the removal of trade sanctions as early as Monday. And that's basically what's happened here. And Iran said, we're going to pump up some oil, get it out into the markets. Obviously, they need to recuperate from what's happened in recent times. The markets are suffering, and it's not just because oil, it's not just because of China. Retail sales in the US decreased to end the weakest year since 2009. It's not surprising that this is the case because we need to realize, look, it's not just all China that's the problem. It's not just one thing or the other. It's everything declining all at once. American consumers, this is from my book, American consumers are the engine for the global economy and have been for decades. The hope is that despite current problems, it will pick up again and that growth will outweigh their debt. Even after the massive amount of money printing, government intervention, growth has been minimal. Now, hold on to this thought for just a moment because all I wanted to note is you have debt and you have, let's call it the GDP or the real wealth or whatever, even though GDP, we know how manipulated those statistics are. Let's just pretend for a moment that it's the real wealth. Well, we have a grand disparity in between that. When you have problems of disparity, you often have a middle class that disappears. Look at this. Puerto Rico economy is collapsing. U.S. Treasury Secretary Jacob Lew said Friday as he announced a visit to the U.S. territory 2 weeks after its debt default. They're in trouble here. This Caribbean island weighed down by $70 billion in debt. The effects of the decade of recession. They're not doing well. They need to get bailed out. They need to figure out how this is all going to happen. But they're a small nation. They're a small, let's call it a territory here. And when you think about nations, when you think about whatever, even if it's another territory or what have you, when they have their own finances to worry about, where are they going to get their imports? How are they going to be able to do their exports? Is anybody buying? Do they have commodities which they can dig out of the ground? Do they have resources? Or do they have, for example, let's call them a one-trick pony? You need to understand how this works, not just for Puerto Rico. You need to understand other countries. Think about other things too, where you have that commodity, and if it is unable to be mined or milled or anything, if it's temporarily prevented from leaving that country, for example, Chile has an earthquake, copper prices, keep an eye on them. Why? Because those exports, being a major exporter of copper, you're going to see what happens to the prices. Now, other things can affect the price of that at the exact same time, and that's where we have fluctuations, but historically you can see things like this. So this goes for oil, this goes for any commodity, and that's something that you need to pay attention to, not just what you see in Bloomberg or anything like this. Walmart to shutter 269 stores, 154 of them in the US. Walmart, generally, you can see this in the financial crisis, when you have bad times, people look for better deals. So businesses like Costco and like Walmart tend to do a little bit better. At least they lag behind the rest in this case because people basically go for cheaper and cheaper deals, and then they have to use government services after that. But it's interesting that Walmart having to close a lot of their stores. It is a significant amount, and they're not the only retailer which has done so. I've covered this before all around the world. In fact, we've seen this. Now, to touch on what I was talking about earlier, U.S. debt and GDP. The U.S. GDP, which once again, not a real indicator, but you know, it's something to look at. Up 1,700%, and that's from 1970. So you can see a fairly steady line here as it's gone up and up. But what happened here since 1970 is that you had this divergence, this schism, which formed, and we all know why, because of, let's call it, for the purposes of this video, let's call it the banker stimulation. And debt, as a result, has risen considerably. In fact, it's up 3,900%. Debt has been growing more than twice as fast as GDP for nearly 5 decades. And when you really try to see it, compare the two, how are we ever going to get out of this mess? If even the fake GDP numbers are not keeping up with the amount of debt, it can't be paid back. It's just simple mathematics. For the first time ever, the total assessed value of the Big Apple properties has topped $1 trillion, spurred on Brooklyn's surging real estate market. New York real estate is booming, particularly in Manhattan, as we see the median home price being $1.1 million. What does that say about real estate? Is it booming? Is it doing well? Well, there are pockets. That's what's important to remember. Some areas have never been worse. Look at Detroit, for example. But you can see this right here, New York, doing well. Does that mean everyone in New York is doing well? Absolutely not. You have that growing divide in between. The tentative assessment roll released Friday by the Finance Department shows that assessed properties values have jumped 10.6% to $1 trillion for 2017 fiscal year, on top of a 9.1% bump last year. Huge. 20% in 2 years, a significant jump. Obviously, would have to declare this a bubble in many cases, but when you print this much money, do you want to call everything a bubble, or you just don't even factor that in anymore? It's all a joke. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. If you head over to Amazon, they have this look inside feature. It actually allows you to flip through the pages of the book to see if you like it. Take care.